What's going on, everybody? Happy Sunday. It is February 15th, the day after Valentine's Day. Hope you all had a wonderful time with your lovers, your partners, your husbands, your wives, your boyfriends, your girlfriends. I had a good time, and now it's on to this week to see what we got cooking. So let's get the charts pulled up over here real quick. Got quite a few alerts set up. Let's get this turned on. Hey, there we go. Technology is a-working today, guys and gals. Let's take a quick look. Holy cow, I'm huge on here. Let me shrink myself. Let's do this. Let's do this. Come here, Tiger. Go. There you go. There you go. Just get off in the corner. Get your dunce hat on. Okay. Shrink a little bit more. There we go. Now we can see everything. Looking at the high impact red folder events for this upcoming week, you can see that today, Japan has had their lower house elections. So a little bit of high impact news for the yen. Let me refresh the screen real quick here. No, I want to see the whole week. This week, apply settings. There we go. Back there we go. This looks right. Now I was thinking something was off. I had to refresh my screen. We were still looking at last week, but anyway, this is what we got coming up this week. Nothing on Monday. Okay, and I took all the yellow folder and orange folder events off, the light and medium impact, so we can just strictly look at the heavy hitters, if you will. So Tuesday is a very busy day. So tomorrow's just kind of a natural, what I would call a natural supply and demand day, guys. No real news to speak of. The more technical setups would probably work pretty decent without having to worry about any of these high impact events, especially if you are a shorter term scalp trader. Short-term intraday trader. Okay, you got the full day tomorrow to be trading without any big news screwing up your setups. So that's always a fun thing. But yeah, we get into Tuesday. We do have some Canada and New Zealand news. Canada's inflation numbers are coming out. They are projected to increase their inflation by 0.3 on the month-over-month number. And Canada, I do believe, is still looking. Well, let's go take a quick look at that, actually. I want to just double check the macro scanners, and I want to look over here at my heat maps. Take a look at Canada. Okay, so they've got a 57% impact rating. So 57% of their high impact news have exceeded expectations. So you can take a look there. The manufacturing PMI data, as well as the GDP number of late, was bullish. Now, we haven't had a GDP number come out of Canada since the basically Thanksgiving, as you can see up there, November 28th. So a little bit out of date on that number. So it'll be interesting to see what we've got whenever that number comes out. But yeah, that's the last report we have. Again, November 28th. The manufacturing PMI as well, bullish numbers. And then we get down to the inflation report the last time it came out for the year-over-year number. Okay, now keep that in mind. This is the year-over-year. This is the bigger one. Where they had a bullish number come out. Now, as always, inflation is good for the currency, but bad for stocks, right? It's just kind of that inverse relationship. So I don't think we have the year-over-year number coming out, though. It's just we have the trimmed and median, but not the regular one, if you know what I mean. But let's take a look here. Let's see here, 2725. I just want to take a quick look at, yeah. So that one's not one of the major ones that we track on the EdgeFinder, guys. But anyway, just looking at the data in front of us, they did have a pretty good unemployment rate number come out a little bit over a week ago. And then their CPI number, again, the last time was bullish. So as far as this week, okay, it's not the regular, it's just the median and the trend. We care mainly about the year-over-year number. So we don't have that one on deck yet. But it's still inflation numbers nevertheless, pretty much previews of the main one. All right, just kind of look at it that way. So, but anyway, if we know that the last one was bullish, then we would expect and hope if you're if you're looking for a bullish Canada dollar, you would still want these to be positive metrics, meaning higher than expected, higher than the forecast. And so far it looks like, yeah, the trend is 0.1 lower as far as the forecast. But again, the month over month is 0.3 higher. So it looks like we could be getting a little bit of mixed data out of Canada for that. But then we move on over to New Zealand and look at the Kiwi dollar. And that's where we get to see their cash rate statement release at 7 p.m. Central Standard Time Tuesday night, where they are projected to keep their rates the same, keep it unchanged, 0.25%. So we'll see if that's priced in. As always, guys and gals, whenever these, especially inflation numbers, non-farm payroll, things like that, when they come out, you definitely want to stay away from trading. Stay away from that buy or sell button. It's just a good way to keep you from breaching your challenge account or dropping a big chunk of your cash account, depending on what you have, right? So anyway, just be careful. And that's with all these red folder events. You always want to be careful. Good rule of thumb is give it at least 5 minutes before the release and at least 5 minutes after the release, just to let it do its thing, because algorithms get triggered. Big banks, whales, they start throwing stuff around, manipulating price, make you think one thing, and then they just rug pull you and go the opposite way, only to turn around and go in the direction you thought it was going to go to begin with. So just be careful. Let the volatility sift and sort itself out. Let the volume itself come down a little closer to normal, and then find the trend and latch on. Okay, that's just really the way to treat these high impact events. So that's Tuesday. Wednesday, we do have the inflation number for the year over year, okay, coming out for the British pound, where they're projected to go 0.4 lower, okay, which would be negative for the currency and bullish for the stocks, okay, the FTSE 100 over there in Britland land. Yeah, that's what I was trying to say. I'll scratch that out. But anyway, that is 1 a.m. my time. I'll be asleep, probably drooling on my pillow at that time, so I don't even care. But I'll definitely check to see what happens, see if we have a trend afterwards, and see if that helps out the British pound. But other than that, FOMC meeting minutes for the US dollar. That's 12 hours later at 1 p.m. Central Standard Time. And then in the evening of Wednesday, we do have the employment change number, as well as the unemployment rate for the AUDCHF. Okay, employment change looks like they're projected to have a cold number come out. Wow, a third of the previous period. So that's obviously a bearish number if that comes out at, well, especially under the 20,000. But anything lower is still bearish. But remember, we always look at these period-to-period changes based off of the forecast itself. Sometimes you may get a cool number, but something beats the expectation that's lower, right? So just keep that in mind. We always care mainly about the forecast itself. Did we have a lower number, or did we have a higher number than the forecast? So again, it remains to be seen. But other than that, looks like they're projected a 0.1% increase on the unemployment rate, which is not great, but it's not despicably horrible either for Australia. Okay, 4% is high, but it's not crazy. Okay, so that's Wednesday. Thursday, unemployment claims. That's our weekly report here in the States. Projected 2,000 more of unemployment claims compared to the week prior for the same number. So that would be a little bit on the negative side if that were to come out. And then the last thing for Thursday is the Reserve Bank of New Zealand Governor Bremen is going to speak and flap his lips. So as always, it's a good idea just to be careful around those times and avoid trading if at all possible, so that you don't get whipsawed and kicked out of your trade, breached accounts, screwed up cash accounts, et cetera, et cetera. So that's the final part for Thursday. And then Friday's a bigger day, guys. We do have a lot of PMI data coming out, retail sales numbers for the pound as well, where they are projected to cut that in half, down 0.2%. So that could be a potential bearish reaction for the pound. And then we start getting into some PMI data for the Eurozone, the British pound, as well as the dollar here in the States. Now, these are all flash numbers, so they're kind of the preludes to the main reports that typically come out, I think, 8 or 9 days later, something like that. Release monthly, blah, 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 blah. Two versions, a week apart. Okay, so these are kind of the preludes to the bigger reports that we get for PMI the week after. But it's still a very good indicator about what we're possibly going to see the very next week. So yeah, it's very important data for the Eurozone, the British pound, and the dollar here in the States. But and most of this is happening quite early here in the States. Obviously, USA, okay, a lot of our good data here gets released about an hour prior to the regular stock market open to give the banks, the hedge funds, the time to do their thing. Okay, put in their positions and plan for the market to open an hour later. So that is a look at your red folder events for the week coming up. Take a quick look over here at the top setups as it stands right now at 12:22 post meridian here on a Sunday. It is not wine. It is Mio energy water. I ain't trying to take communion all day on a Sunday. Okay, top setups, ladies and gents. Aussie Swiss is alone at the top at a +7. So that's obviously going to be my favorite target to look at right off the bat, since it is giving me the strongest bullish signal. Do have a few other items, including gold that's back on the list. Okay, gold's back up here with a +6. Now, I think it's kind of jumped on, jump off a couple times over the last week or so. But as it stands right now, again, at 12:23 on a Sunday, it's giving us a bullish signal. And then we start getting down in here to the CAD Swiss, the Kiwi dollar, the Aussie dollar. Those are all +5s. They are bullish signals, but it's not like excitingly strong for me. I like it when we start getting 7s and 8s and 9s and higher numbers like that. That just tells me that there's more and more of these odds enhancers in the favor of the base currency, which is always the first currency. Okay, if this is a bullish currency pair, then that tells me I want to be buying the Aussie dollar. I want to be selling the Swiss franc. This is all in one transaction. Okay, I would want to buy gold. Or for these three pairs, I'd want to buy Canada dollars and sell Swiss francs, all in one transaction. Okay, buy New Zealand, sell the US dollar. Buy the Aussie dollar, sell the US dollar. So that's how currency trading works. Okay, we got about 27, 28 major pairs that are connected with the 8 major currencies of the world. Okay, the top 8. So the higher, they're the best liquidity, and they're pairs where we have a lot of data, and that match quite well with a lot of these fundamental and sentiment analysis readings that we like to look at. So that's how we would attack the bullish side as it stands right now. And then flipping over to the bearish side, looks like the strongest item that is on the list is one that I don't even trade. Okay, that's the dollar South African rand. That's the ZAR. I just don't have it on any of my brokerage accounts. So I personally just ignore dollar SA every time that pops up. But besides that, we do have a couple -7s. Okay, we got the pound CAD, we got the Euro New Zealand. So in these examples, we'd want to be selling. Okay, if I'm looking at the pound CAD, that means I'm selling pounds but buying Canada dollars. Okay, above that, I'm selling euros but buying New Zealand dollars. Okay, so that's how that works. It's just everything's just a flip. Okay, as far as short selling in the currency market. But that's the top 3 that I see right now is the 7s. Okay, 2 -7s, 1 +7. Let's go have a look at them. But before we do, I want to see what the big banks and institutions did on the COT report. Okay, this comes out every single Friday around 4 or 5 o'clock my time, Central Standard Time, and it tells us what the big banks and institutions did real time in the markets for the week preceding the release. Now, it's always accurate as of the Tuesday before the Friday, so 3 days prior until the Tuesday prior to that. So think of it this way. When it's released on a Friday, it's accurate as of 3 to 10 days prior. Okay, it's a little bit weird how they do the commitment of traders report, but such is life. That's the hand we're dealt, and we got to play it like that. So what did they increase their net percentage on? Well, it looks to me like at the very top of the list, ladies and gents, is the loonie, the Canada dollar. So the banks increased their net percentage, their net change by 3.5%, and they did that by increasing their long holdings by 7,157 contracts. So that by itself is a nice bullish signal. But it doesn't stop there, because they did have 3,989 short contracts that they got rid of, okay, that they offloaded. So that in itself is a bearish signal. Now, when you a bullish signal, because they're getting rid of shorts. So if they're adding shorts over here, but they're getting rid of longs over here, that's a nice bullish signal. That means they see something in the Canada dollar, and as a result, they turned around and increased their net percentage. Okay, so that is a very nice, very nice signal. Now, this is not, as always, as I say every time I talk about the COT report, the commitment of traders report. Okay, this is not the end all be all. But if the big banks and institutions are the ones making all the money and taking all of our money, then do we not want to observe them and follow their every move when possible? Absolutely. How do I do that? Supply and demand zones. Okay, looking for some overbought and oversold spots within those zones. Okay, A couple moving average crossovers that I've started adding into my repertoire to thin out some of those signals. So anyway, really nice for Canada. And right behind it is the Australia dollar, where they did increase their net long percentage by 2,400 or by 2.46%. Good grief, Tiger. Okay. So they did it a little different, though. They actually got rid of a bunch of long positions, but they got rid of a hell of a lot more short positions, which offset the longs, thus 2.5% net change to the positive side. So Aussie is in the number 2 spot, and then below that is the S&P 100, where they got rid of 4,700 longs, which is a little bit of a bearish signal. But look how many shorts they got rid of. A hell of a lot more, okay? And they have a lot of holdings over here overall, okay? This is their overall holdings, long and short contracts. But you see here, they got rid of 33,000 shorts. So that majorly offset this little bit of a bearish signal here, okay? And it made it positive, made it bullish. So overall, they did increase by 1.78%. So there's your top 3 bots. What about the top 3 sells? Look at that, at the very bottom, Nikkei. Nikkei at minus 7.13%. They did add 338 long contracts, which is a little bit of a bullish signal, but they added a lot more shorts, okay? 1,935 short contracts. So that offsets these measly little amounts that they ended up buying overall. And they don't have a ton of holdings to begin with, 9,000 longs, 6,000 shorts, but from week to week, they decreased their longs, okay? Because they are net long. And we know that because of the percentages right here. They're 58% net long, 41% net short. So it's still, if you're a position trader, a longer term position trader, okay, that's still somewhat of a bullish signal. But when we look week to week as short term intraday traders, slash, intraday traders themselves, that's a bearish signal. Okay, so they sold off on the Nikkei. U.S. 10-year treasuries, they did the same thing. They did increase their shorts because they are net short by 71%. But they increased it by 4.18%. I don't personally do anything with the treasuries. That's really kind of on my radar as far as getting a lot more in-depth knowledge with the treasuries and how they affect everything. Because treasury bills, bonds, guys, these things are super important in the currency world. So that is kind of my little side quest to kind of figure out all that so I can give better commentary on it going forward in the future. But if we skip that for now, the British pound is the number 1 sold currency at a minus 2.96%. They did that by, you can't tell it by the longs because they actually, I'm thinking of it the opposite way. So they got rid of 6,500 long contracts, which is in itself a bearish signal, but then they added 5,300 shorts. So that makes a nice minus 2.96% for the British pound. And then we got silver and gold on here, even though, and see, this is the thing with gold. Gold, remember, it gave us a +6 on the top setups watch list. But the banks didn't agree with that. Okay, the banks didn't agree because they got rid of gold. So they got rid of 1,700 gold contracts of long and 2,200 of silver. So that's a little bit bearish, guys. But then also the big banks, okay, the smart money, they increased their gold shorts by 3,800. 699 for silver. So those are bearish. Okay, 2.15% to the downside for silver and 1.31% for gold. So it's reasons like this that I don't know that I want to get necessarily excited about that gold top setups. Because remember, if we flip back over here, gold is giving us a +6. And not to mention all the craziness with gold and silver right now, getting sold off, profit taken, this and that. Not to mention the geopolitical items between Iran, okay, with all of our convoys sitting over there in their backyard in the pond. There's just a lot going on geopolitically right now. But anyway, that was your COT report. So as far as currencies, the pound leads the way in the most bearish. Okay, and then all this stuff up here in the middle, it's a little neutral for me. It's not really a very strong signal as far as I'm concerned. I really only care about the extremes. I care about the fact they sold Nikkei, they sold the Japanese economy, okay? They sold the British pound, and then they sold gold and silver, which makes me personally a little hesitant about that top setup for gold that we have. And then, of course, on the currency side for the long stay, the Canada dollar was the clear winner, the Aussie dollar, the S&P 500, okay, and then the euro, trailing right behind. So that's that. Let's take a look at these top 3 items I'm looking at, the +7 for Aussie Swiss, and then the -7 for the pound CAD and the Euro New Zealand. And then I'll probably just cut the video after that because I'll be back, ladies and gents, tomorrow morning at 6:30 a.m. Central Standard Time for my live streams. I missed you guys this week. I was taking a 4-day currency class. Most of it was pretty much a review for me, but I did learn a couple things, like I mentioned earlier, on moving averages and overbought and oversold signals with a different set of numbers for the relative strength index. It's just more of an added confluence, and I love it because it fits in seamlessly with what I'm already doing with supply and demand. So I've already looked this week and seen that this is going to help me personally to stay out of a couple trades here and there that I normally would have just hopped right in, because again, it's filtering out some that are not that much overbought or oversold. Okay, so I'll get more into that as we go along this week. I'll probably whip that out a little bit. I've got some early data from last week on how it performed, and it worked pretty well. Okay, I gotta say. But my biggest personal issue with this past week was the fact that the trades I did get into, I did not give them enough breathing room with the stop losses. Okay, I had a few losses that I probably shouldn't have, but it's because I was too tight with my stop loss. Because in 3 of the cases, okay, it stopped me out for that small loss, and then went just a little bit lower, and then took off and would have been profitable trades. So I'll probably cover those over the week. Might even do it tomorrow, just to give you an idea of what I'm looking at. But anyway, but yeah, I'm back. I'm glad to be back. I took the rest of the week off. I did one 11 a.m. live stream. But guys, I was getting up at 2 a.m. for this class, because remember, it's London time. The class is in London, so the class itself was started at 3 a.m. So anyway, needless to say, when that class ended, ate lunch, and then I was just out. So I just took the week off, but I'm back to full strength this coming week. So let's go ahead and take a look at this Aussie Swiss pair real quick, because remember, this is our one long position, or bullish setup, right? Bullish setup from the top setups list from the EdgeFinder. Okay. And anyway, yeah, daily we're looking at nothing but higher highs and higher lows, right? So this is agreeing with the signal. Okay, the trend is our friend until the bend at the end. Okay, that's one of the first things I learned at when I went to Online Trading Academy. Is the last thing you really want to do is start going against the higher time frame trends. Okay, you want to stay with the trend until the bend at the end. So daily up, let's go down to a 4-hour. I don't really have anything great on a 4-hour as far as supply and demand zones. We did have one here, but as you can see, if we look at the swing high, the swing low, this is in the middle, right? This is the diddle in the middle that we try to avoid, just to not get chopped up with all the rest of the retail traders in this area. So I want a bigger discount. I want to get as close as I can to the origin of this overall strong move up. So for that, it's not looking great on a 4-hour. Just means I got to go down to another time frame. Okay, there's your 2-hour. Go down to a 1-hour, and what have we got here? Ooh, got a 1-hour demand zone right here, ladies and gents, followed by, looks like 4 green candles coming out of it. We did end up breaking some structure points on the way up. And this is looking good overall. The one thing and also the fact that we did have some pretty decent expanded range candles in the RSI, the volume spread analysis, guys. Yeah, I gotta get the cobwebs out of the old brain piece today. But there you go, RSI, these yellow bars down here, okay? They're much bigger than the green ones preceding it. So that tells me that that's where institutional type volume started picking up. And that's what ended up creating this demand zone. Okay, think of it. You have a nice candle here that dropped, and then the buyers really stepped in because they rejected prices down here strongly. They did that because you see this big wick. Hold on, guys. Hello?
It's me, sorry.
Oh, okay. But anyway, sorry, guys. So that's a very bullish signal. Now, I'm looking at a return to this candle. Real simple. Now, what I would like to see, what I would really like to see is RSI to drop below the 20. Okay, drop below the 20 line. That's that red line at the very bottom going horizontally. Okay, I've got an 80 line up top. So it's not your standard 30-70 line like you see on RSI. It's a little bit deeper. It's a little more extreme of pullbacks. This is one of my new things I'm adding in, guys, and I've back tested it and it works out. It's actually working pretty well because it keeps me out of a lot of zones that might be a little higher up. That's just not quite showing the overbought, oversold strength. So what I would like to see in order for me to get into this trade is obviously price to drop into the demand zone. And by the way, you see my line, my alert out here a little deeper into the green. Well, why is that? Well, that must mean I got some confluence somewhere lower. So let's go to a 30. Okay. Nah, let's go to a 15-minute time frame. Do I have a confluence down here? No, not there. So let's go back to the 30 real quick. I can't. Oh yeah, that's right. Wait a minute. Is that it? Yeah. Let me see. Oh, you know what? I actually need to move my alert up a little higher. Actually, I don't even know why I put it that deep to begin with. I want to put it before the demand zone itself. Okay, the alert. Now, did I have that on a 10-minute? I can't remember, guys. I'm going to have to go look real quick. I can't remember what to put it on. No. You know what? I think this is the one I didn't really have that great of a confluence. But it's okay because I have a way around it. Yeah, I mean, obviously, if I go down to a 5-minute, guys, if I were to put a line at the top of the 5-minute demand zone, it'd be a little deeper in. But I want to catch it up here. So I'm going to utilize the whole 1-hour time frame. But yeah, at the end of the day, I still have a gap down here. It's just not the greatest looking. But let me go all the way back to a 1 hour. Take a look. Yeah. Well, and here's the thing. When price comes in, and again, in order for me to get into this trade, I want to see it go under the 20. So that's step number one. Number two is I would prefer that the 50, which is this light blue line, this is our 50 exponential moving average. I would like it to stay above the 200, which is this dark blue line that you see here. Okay, that's just showing me that on a 1 hour time frame, the lower number is still in control. So if price starts going down a little deeper into the zone and this blue line starts flipping underneath, I don't know. It's gonna probably keep me out. So that has to stay above, but also I need to see RSI go below 20, okay, to really get that extreme oversold reading. If we do that in here, if we get a wick under the bottom of the candle, a bullish engulfing candle on a 15-minute time frame, then that might be my trigger. But ultimately, the safest thing to do is to wait till I get a drop in and then a bullish 1 hour candle close, guys. That was the other thing. That was the other piece that I kind of picked up over the week, was making sure that 1 hour candle closes bullish so that you can visibly see the momentum shift from this short-term downtrend that we have, okay, lower lows, lower highs, okay, until we get a bullish momentum candle that closes. So that's really what I'm looking for. As always, we can always look for, a break of structure to the upside, something like this right here where we break this structure point and then return to a newly created demand zone somewhere in the bottom of this newly created, momentum leg, right? And then catch a bite of the upside. So that would be the potential play right there. So break this structure here, get a pullback to a newly created demand zone somewhere in this area like this. And right here is our buy point. But again, a lot of it's going to depend if we get RSI oversold rather. And then if we can keep our 50 over the 200 line. So that's really the piece I added this week. And we'll talk about it more along the week, but that's really the piece I've added. Okay. I like to think of it as just an additional filtering system. Okay. It's called the backbone strategy. But all I've really done is just added it on top of my supply and demand. And I'm telling you, it's just worked beautifully as an additional filter. And I love it. Lerve. That's L-U-R-V-E. Lerve it. Okay. Lerve is stronger than love. Oh, that's beautiful. So anyway, that's my Aussie Swiss play for the week. And then as always, I would just look to take price, to the top. that's a higher time frame. But if I want to stick to the, return to the most recent breakup structure, then yeah, I mean, that's the thing. Let's go back to a day real quick. Yeah, I mean, that's obviously the play, because here's the thing. If I can catch a bid down here, there's no reason price should not return back to the origin of the strong move down, which is the top of our curve analysis, right? I mean, look at these higher highs back here. Okay? We're just getting this kind of, this solid uptrend, right? So, perhaps a much longer time frame, not longer time frame, but a much more aggressive, profit target would be wherever price intersects this line on the way up. But all I care about is just getting back to the, get back to the spot where price dropped to begin with, and that would make for a pretty good multi-day swing trade opportunity, and then cash out up here. Now, if we wanted to get a little more detailed, we could look and see if we can't find a supply zone in here that might potentially block us on the way up. I'm not really worried too much. Let's see here. Yeah, not worried about this area down here. I have a lot of volume spread analysis happening in this candle here. So perhaps there might be some smaller time frame supply hiding in here. No, I'm not really worried about that. Yeah, there we go. Okay, so this would be a potential supply zone. Talking about this green candle, this green indecision candle. You got a bunch of candles, well, not a bunch, you got 3 with a bunch of wicks. So I would just incorporate that whole thing, pull it forward, color it red, and that, ladies and gents, would be a spot I'd want to be aware of that could give me troubles. Hey, price comes in, it could push price all the way back down. Or what I would expect, because I'm expecting it to go to the origin of the overall strong move down, I would expect price to bounce in and get a reaction, but then just continue up like that. Okay, that's what I would expect, because as always, price loves to go from higher time frame zone to zone. So in this instance, we're going from this lower zone, this lower demand zone, to some higher supply zones / resistance points. Okay, or again, like I said just a minute ago, we could even look at this as a moving average bounce, not a moving average bounce, a trend line bounce. Okay. I know that's kind of hard to see. And not to mention, we got a daily supply zone up here, ladies and gents. This big, lovely yellow rectangle right here. So this is I'm definitely getting a bounce of some type at some point from this spot. Because look at this indecision candle on a daily time frame, followed by a super strong leg out and continuation as well, along with a gap. There's your gap right there. There's your gap, ladies and gents. Fair value gap, acceleration gap, runaway gap, novice gap, whatever kind of gap you want to call it. That will definitely act as a magnet, pull price to it, but possibly bounce it back down again. So by then, though, I'll be out of this trade. As long as I get a drop in, I get the oversold reading, I get the 50 to stay above the 200. I get the unfilled orders to catch a bid down here, give me a wick, give me a tail, give me an inside bar, give me a bullish engulfing candle, give me some volume spread analysis growth. And ladies and gents, we're off to the races. Okay. So that's your Aussie Swiss play right there. That's my number one going into tomorrow. As always, these are very dynamic signals. And what you see today could be completely different tomorrow. Okay. And it all, probably not tomorrow, though, because we don't have any major red folder news. Again, that's not coming till Tuesday. But that's my one and only favorite bullish signal right now. And then I'm just going to breeze through these 2 bearish ones, these 2 -7s, and then we'll just cut her out for the day. So pound CAD is right here. Okay, let's go to our daily as always. Now this thing overall is quite choppy. Okay, this is our daily zone, our daily time frame. But we are currently still in this monthly supply zone right here. Okay, this big green candle followed by the drop down. Now, it didn't break a structure on a monthly chart, did it? So am I really that worried about it? And is it no surprise that price is chewing through it, not really getting a strong bounce down? Well, not yet anyway. Okay, but again, if we go to a daily, you can see we did finally bounce into the daily, which is inside of the monthly, and we got a couple bounces from it. I want to sell this market, but it looks like it's a little too sideways / almost a little up for me. And oh, by the way, we dropped into a 4-hour demand zone down here, right here, with a big bounce up, and then another bounce up, and then another bounce up. So I don't know, man, because we did bounce into a smaller time frame supply zone on a 1 hour right here. Okay, we touched right here, and we got to push down. So I'm basically trying to squeeze out a smaller time frame than that. Okay, you see a white line there. It's probably it's a 30 or a 15. I can't remember, but this is probably my least favorite because, in my opinion, this price area has been tested a few times. Yeah, it only went in really one time on this wick, but and also it bounced into this higher time frame demand zone below. Remember, the higher the time frame, the more likely it is to win out versus a lower time frame zone. Okay, so if this whole price action just breaks this zone downstairs here and forms some new lower lows, then I'd probably be more happy to get into this trade. So in other words, come down, let's continue through and have a new low, and then maybe we could find a supply zone up here like this to sell into. So it's a little more longer time frame. I don't think I'm too excited about trying to sell up here. Yeah, it is a smaller time frame sideways trend because we got, you know, double highs or double tops, I guess, double bottoms down here, or triple bottom really. So yeah, potentially we could be taking a short here and just, buy to cover down here, but it's not real. It's a sideways action. I like trends, guys. I like strong trends. Again, if we go back to the daily time frame and refresh my screen, it's just overall just kind of sideways. Okay, let's break through all this nonsense, break through this zone down here, and start making some better lower lows and lower highs on a couple of different time frames, and this will be a lot more intriguing to me. But the reality is, if we're looking at curve analysis, I would have to be drawing at something like this. Okay, swing low, swing high, swing low, and then where are we at? We're in the bottom quadrant. We're in the discount zone. I don't want to sell in discount. I want to buy in discount. I want to sell in premium. Premium is up here in the top third. Okay, so nothing about this trade is exciting right now. Yeah, I'm getting a bearish signal, but I'm trying to sell in a discount zone. Okay, I'm trying to sell in a discount zone. I don't want to do that. So it's just going to have to give me a new fresh set of lower lows and lower highs for me to even be interested at all in pound CAD, despite the -7 top setups number for it. So we're going to skip pound CAD, and we're going to finish off with the Euro New Zealand, which I had one loss last week on, but I also had one win to end the week. Okay, so I had a win and a loss. I was 1 for 1. I do believe it was Euro New Zealand, wasn't it? Let me double check. Where is my crap at? There it is. Euro New Zealand. Yeah, Euro New Zealand. Okay. So we'll finish out this video with that. Now, as you can see, my alert is expired. So after I finish this, I've got to go through and update some of these alerts. But if we start with the day, okay, if we start with the day, now keep in mind, the 8 EMA is below the 21 EMA. So the 8 is this red line, and then this lighter red is the 21. That's one of my first favorite things to make sure I'm following in line with the trend. Okay, in this case, it's giving me the red, the 8 below the light red 21. So bearish trend is intact. That's step number 1. Then again, we go down. Okay, do I have any 4-hour supply zones? I do. In fact, I have a daily. Okay, look at this green candle. Look at this big green candle with a wick above it. Okay, green candle, wick above it, followed by an expanded range leg out candle where your volume spread analysis candles are growing. That's a sexy spot for a daily supply. Now we go down to our 4-hour and find our confluence. And as you see, we do have right here. Okay, we got this red candle. We have a gap underneath it. The gap isn't as good looking, but it is a gap nevertheless. That's that white rectangle there. So there's my confluence. Now, how do I sell out of this point? Well, I dropped to a 1-hour, and this is where I look at my 50 and my 200. Now, my 50 is the light blue. My 200 is the dark blue. So that might be a little bit too far away because by the time price comes up to my zone, and this is what's I've added this week, guys. Okay, in the past, I would have just did a short sell up here in this confluence, and I still may. I just won't be, putting a full trade on, a full percentage. Cut my risk in half or 2/3, something like that, right? But what I've really been practicing on this week is just this filter, 1 hour with given my time frames, and make sure that the 50, if I'm trying to sell this, the 50 is below the 200. So like I said, the 50 is faster than the 200. So by the time price gets up here, the 50 EMA is clearly going to, at that point, going to be over. Okay, it's going to be over. So I can't really utilize my new strategy, but what I can do, because my favorite time frame is still the 4 hour, I can look at it from the 4 hour time frame. So if price comes up on a 4 hour, okay, then the 50 will remain under the 200. And I need my RSI to go above 80. Okay. As long as it does that, all we got to do is just touch that red box right there, and I'm shorting this. Okay. I'm shorting it. So we'll see what happens. I would obviously want it to come up here. If I want to be extra careful, then I can look for that break of structure like this, return to price, catch a newly created supply zone, or a 61.8 fib retracement, okay, from this new impulse leg, however I want to do that, and then short this thing. That's the trade. That's probably my favorite bearish. Okay, I've already traded it twice last week. We might as well go for it a third time this week if we can get another signal. Just keep going to the well. Keep going to the well until it's dry, right? And so far, there's still water in this well. So I'm going to keep my eye on EURNZD as it stands right now for my number one bearish entry, followed by Aussie Swiss for my number one bullish entry. So there you go, ladies and gents. Aussie Swiss long, Euro New Zealand short. That's my top two pairs going into Monday, and as well as when the market opens later this evening. Okay, we got about 4 hours left. So that's it. I'll be back to normal. I'm going to get up out of here for the day. I'll get this uploaded. And yeah, 6:30 tomorrow, guys. 6:30 a.m. Central Standard Time. Please do come and find me. As always, you can find me at Trade Like a Tiger, which is right here. Okay. I've got my live already set up. In fact, if you just go to my homepage, you can see I'm trying to remember to add each day's live in the main section here so that it's, broadcast, or it's the focal point. And then I'll also get back on my shorts videos, okay, this week as well. And then this video I'm doing right now that I'm about to upload, it'll go right here to my videos section. So with that, ladies and gents, have a wonderful day. I look forward to talking to you tomorrow. Have a good one.